Good morning, good afternoon, good evening, wherever you are in the world. This is Dr. Nelson Ogunshakin from FIDIC CEO. Welcome to FIDIC COVID-19 webinar. This is about defending your business and securing your business going forward, notwithstanding the COVID-19. I'm delighted to welcome so many participants to this particular program this afternoon. I am mindful that we have, speakers from different geography, from Japan, from Spain, from England, from United States, and from Nigeria, who are going to participate in this program this afternoon. I'm really pleased that we've got so many people who are online and joining us in this session. For those who've been following us over the last 8 weeks, you will have noticed that we had quite a number of sessions in the past. We started by looking at how the big issue of COVID-19 is impacting our industry. And we had a delegate, on speakers around the world who joined us that particular session. We focused on projects. We look at issues to do with COVID-19 as it related to force majeure on big, contract projects. We went on to discuss issue on joint venture. We look at, consultancy agreement. We look at issue about risk. We look at alternative dispute resolution. And more recently, we look at the people, the impact on health and safety. Today, we are focusing on the balance sheet. What does this COVID mean for your balance sheet? How do you look at your business continuity and maintain your financial position and cash position? Well, let me start with some few statistics. It's easy to look at statistics on a global basis. I'm told we've got close to 3.5 million people impacted by COVID-19. Sadly, we've got close to nearly 230,000 people died all over the world, of which in the United States, close to 80,000, and followed by UK, which is 35,000. We sympathize with those people who lost their life and with their family. But having said that, the critical point is how do we move forward as a business industry? And in this particular session, we enable us to look at the financial side of the business, which is really about our people and how do we maintain relationship with the client and how do we keep things going. So my 5 minutes introduction is really to introduce the candidates, and I think we've already got their detail. I do not wish to go through their CV because their CVs are self-explanatory. Once I finish that, I will be inviting the president of FIDIC to say a few words of welcome, which is Bill Howard, who will say a few words. And then we take it from there. We got 4 panel speakers, including our board member, who we share their thoughts between 5 to 10 minutes at a time in time. And once we complete that at about 1 o'clock, which is about midday, wherever you are, we will then have a session whereby we'll have a question and answer. And some of the questions I'll be feeding into the delegate, and some will come from the floor. And I'll just caution, please keep your questions short and sharp. And when the time is right, we'll open the Q&A session about an hour's time. So without further ado, I'm going to invite our president, Bill Howard, to say a few words. Bill, the floor is yours.
Well, thank you very much, Nelson. And I will just say a few words. First of all, I would like to congratulate and sincerely thank Nelson and his secretariat staff for putting these webinars on. Under the best of circumstances, it would be a difficult and challenging task to share thoughts with people from around the world under work from home mandates and with the COVID-19 virus and impacting all of us. It's just a tremendous achievement what Nelson and his secretariat staff have been able to do. So far, I keep my fingers crossed, we have not had a major glitch with these webinars, which I think is absolutely spectacular. So thank you very much, Nelson and secretariat staff for all the assistance in putting these together. I would also like to thank our speakers who have been doing a tremendous job. I'm sure many of them, all of them, have many other pressing matters with their families, with their firms, and perhaps with some close relatives as well. Everyone is dealing with a lot of things these days, so I very much appreciate the speakers spending time with us on this very important subject of keeping our businesses healthy. And I also want to thank everyone who's participating in the webinars by listening in and encouraging you to ask questions in the half hour or so that Nelson mentioned, we want to get ideas and share dialogue, and sometimes the questions and answers are extraordinarily an extraordinarily valuable part of these webinars. And the subject matter today is tremendously important. The first 8 have been important. This one certainly is as well. I think, as Nelson put it, one way to describe this session is how do we keep businesses viable after, so that they can deal with all of the change that will be coming after the pandemic is more under control. And boy, change is certainly going to be with us. As an engineering profession and an organization that represents the engineering profession, I hope very much that massive infrastructure programs, perhaps different infrastructure programs, but infrastructure in general will be part of how we get the world back on their feet. And we're certainly qualified to do that. We need the best firms healthy to make that happen. So with that, I will turn it back to Nelson.
Thank you very much, Bill. I'm always very impressed, Bill, that you, every time you get up early in the morning and to be, ahead of us, and considering you are actually based in the United States, so it must be about 6, 7 o'clock in the morning of your time. Once again, thank you very much. We do have a number of speakers, right? And before I sort of, introduce the panel, we have Luis, who is Villarroya from Spain, to give us his own view. He's got a reasonable sized business, and it will spread across, most European countries and Latin America. He was his board member who supported us in the last one. And I'm delighted to have you, Luis, again online to share your thoughts with you on this subject. As we know, the subject is how do you defend your balance sheet, secure your business financial position, and ensure liquidity. A lot has been happening, as Bill said. The question is, how do we keep the business going and make sure beyond COVID-19, we do have a business? Luis, the floor is yours. Thank you.
Hello, everyone. Thanks, Nelson, and thanks for this invitation. In the last Thursday webinar, we were talking about how to protect our people as priority number 1. But most of the speakers concluded that in order to protect our people, it was absolutely necessary to protect our companies. To that, we have come today to talk about how we can protect our companies. To define the protection strategy, first, we have to understand what the boundary conditions are in. This crisis comes to us when in many countries it was not yet finished healing the wounds of the 2008 crash. But this crisis and the previous one have very different roots. The 2008 crisis was a systemic crisis that affected initially to the financial system and then cascade to all the rest of sectors. It was like a certain feeling that abuses and excesses was in the origin of the crisis. The collapse of the financial system sank a totally banked world. The feeling that excesses and mistakes had to be corrected was the origin of a policy based on rigor and control. Investment sank because the paradigm was deficit and debt control. However, the present situation is completely different. The problem comes from outside. Nobody is guilty of what it is. There have been not excesses. Quite the contrary. Countries and in general, companies are doing quite well. Now there is a different state of opinion in which it is believed that we have to boost economy, and for that it's necessary to invest. An increase in debt and deficit will have to be assumed. In this context, perhaps our industry is less affected this time, and it's confirmed once again that we are anti-cyclical. This happens at least in Spain. The extraordinary infrastructure plans will be the engine of the economic recovery in many countries. And additionally, banking is in general healthy at the moment, and credit will be able to flow thanks to the extraordinary financing plans of the central banks. Accordingly, it seems that our industry will be little affected by the pandemic, and this is not the case. Companies working in the field of public infrastructure will be less affected, but the rest will be strongly. Where the greatest risk will be generated, in Spain and in the Latin American countries, will be in the short and medium term. And in the short and medium term, in Spain and the Latin American countries, the critical point will be the cash management. Companies that may have problems will be those with cash shortage. In this situation, it will be difficult to control the balance sheet items because the greatest difficulty in orderly control the balance sheet will come from the control of the profit and loss account. In the short term, this year, revenues will decrease because many projects will slow down and others will be paralyzed, and that means that the production will drop. What may happen this year with contracting and backlog in Spain and Latin America is absolutely unpredictable. It will be also critical to control that all the man hours charged to projects are going to be invoiced, because if not, we will find in the middle term with some fake work in progress and potential hidden losses. At the moment, the figure of project manager is critical. He has the responsibility to control all the above parameters, as well to ensure the permanent contact with the clients and the quality of the project. From the treasury management point of view, I think that it's essential to make a clear priority list of payments, and that will depend on the specific condition of each company, and obviously, if there is a cash shortage in the company or not. But believe me, this is what the most companies in Spain we are doing today. If possible, I recommend to generate a buffer that covers 2-3 months payroll. Keep buffer if you won't keep your sleep. One possibility to have the buffer is to get credit lines or back loans. Sometimes it will be difficult to find the balance between damaging our balance sheet, increasing our liabilities, this is getting credit, or improving our cash position. The normal thing will be that at the end of this year, the balance sheet of our firms got weaker. First, because many of them will make losses, which will weaken their reserves, and also because the liquidity levels will decrease and the liabilities will rise. I want to tell you that in Spain, this year is going to be possible to obtain additional credit lines thanks to the specific tools that the government is implementing. For several firms that last year or the beginning of the year was almost impossible to obtain credit from the banks, now with the guarantee of our government, this is going to be possible. But any case is a process that is taking longer than we initially expected. Another risk that must to be considered at this time is that claims could increase, since there are many companies that in desperation didn't try to get money from anywhere. We must increase our risk management and avoid potential claims from our clients, partners, or suppliers. That could lead to an increase in the insurance policies rates. Within risk management practice, it is convenient to carry out various scenarios, considering the best and the worst possibilities, and establishing strategies for all of them. It is also important not to lose control of other risks. This pandemic may aggravate other risks, and the excessive attention to COVID may lower attention in others. Many times we are repeating that the great intangible asset of our companies is our employees. This is our human capital. But in these circumstances, many companies will face the horrible dilemma of retaining the staff or depending the P&L account in the absence of work. Once again, this will be the most difficult decision for the managers of the company, but something absolutely necessary to do it. This situation demands imaginative solutions and shared efforts. In Spain, most companies are resorting to temporary layoff or reaching agreements to reduce salaries progressively, with more reductions for higher salaries and less for lowers. To finish, I would like to tell you that, in my opinion, now more than ever, the situation of human crisis requires a great leadership. The greatest immediate impact of the virus is in our people, and leaders must now focus on taking care of their employees while adapting to a new ways of working. Managers must win and maintain the trust of their employees, and that will depend on the degree of concern they show for their professionals. The proper leadership will be, in my opinion, the best tool to protect the balance sheet, the liquidity, and the companies from the pandemic. Thank you very much.
Thank you very much, Louis, for that particular, helicopter view approach, which I think is actually quite very insightful, making a distinction between 2008 financial meltdown and what we now have, which is a really good way to look at it. And I like the way you concluded that we need to protect our people, we need to manage balance sheets, and yes, reserve may go down, liquidity needs to be managed, and cash flow is king. Thank you very much, Luis, on that. I'm going to invite our first speaker, which is the president of Nippon Koi, Mr. Ruichi Arimoto from Japan, to give us his own view on the subject. I will caution those who are participating to bear with us. There may be an element of translation that needs to be done on this. So, Mr. Arimoto, the floor is yours. Thank you.
Thank you. Good evening, everybody. I'm Ruichi Arimoto, Chairman of Engineering and Consulting Firms Association, Japan, and the President of Nippon Koi. Thank you for inviting me to speak at this webinar. As globally there is a battle against the coronavirus, I'm delighted to participate in such worthwhile discussion spanning different countries and the region about how consulting engineering companies can best overcome this difficult situation. And the current situation which the Japanese consulting engineering industry faces differs greatly between our domestic and overseas activities. Let me begin by explaining this. The domestic market in Japan is about 1 trillion yen annually, with 45% of orders related to the Ministry of Land, Infrastructure, Transport and Tourism, and other ministries. 45% from local government, including the Tokyo Metropolitan Government. And the remaining 10% of the private sector. And there are 493 member companies of the Japan Civil Engineering Consultant Association, whose main business is domestic, and the market share of its top 50 members is 50%. With the spread of COVID-19, and the Ministry of Land, Infrastructure, Transport and Tourism announced a policy to accept temporary suspension of contract services upon request from contractors. And depending on the criticality of the contract in question. there has been a strict increase in suspension of projects since the start of the new government fiscal in April. Since later February, most contractors have required staff work at home and taken measures to prevent infection by staggered commuting. The office attendance rate of Nippon Koei since April has been 15%, and most of our staff can work at home unless there is a need for technological calculation that require high-speed processing or reference to materials which are not permitted to be removed from the office premises. The government policy is for projects aimed at forming a disaster-resilient country, not to be interrupted. And the pattern of orders from Ministry of the Land, Infrastructure, Transport and Tourism has not changed. It seems that some local governments are restraining the execution of public works budget to prioritize infection control measures. But at present, there is no big difference from normal times in the level of orders. An issue is how to overcome the lower productivity caused by remote working from home. Overseas business constitutes a market of 100 to 25 billion yen annually, with 93% related to ODA, and the remainder for foreign governments and the private sector. The ODA figure is 55% yen loan, 40% technical cooperation other than yen loans, and 5% other. There are 76 ECFO Japan member companies that carry out overseas business, including about a dozen large companies, which also have large shares in the domestic market. And the SMEs, which excel in particular area of expertise. As COVID-19 has spread, JICA, a Japan International Cooperation Agency, has instructed all project staff for technical cooperation projects, which was directly funded to return to Japan. Many of these engineers have been on standby since their return. Certain services that can be executed in Japan may be deemed as within the contractual terms. So project by project in consultation with JICA. We have been designating overseas assignment or domestic ones. For ODA loan project it depends on negotiation with the contracting agency whether expatriate staff are permitted to return home. However, contracting agencies in the debtor nation don't in principle allow interruption to the services. In addition, in some cases, projects are effectively suspended due to lockdown, and the staff cannot return to Japan. Many developing and emerging countries where ODA projects are executed at high risk of infection and don't have advanced medical institution. So negotiation regarding the safety of expatriates and cost of suspension and the recommencement of projects are becoming critical issues. In this situation, we must focus on maintaining overall corporate operation rate improving productivity of remote working, and cash flow focused financial management. All the time confirming whether existing project to be maintained, extended, or suspended. Accordingly, for overseas projects where the operating rate becomes a concern, we look to transfer assignment to domestic work, following a discussion with JICA and the related government bodies. We should shift staff for overseas activity to domestic realms where stable business operation can be expected. We should reduce the proportion of private projects, which are most likely to be halted, and concentrate instead on public projects. There is a need to develop IT capabilities to enable working remotely from home. We should reduce costs of non-essential operation as far as possible. That is what, for now, can be done as crisis management. Regarding the impact of COVID-19 on the global economy, the IMF estimates that GDP in 2020 could decrease significantly by 3%. Looking at the 2021 fiscal year, should the pandemic come on an end in the latter half of 2020, it could be possible gradually to ease the measure of preventing a spread of the virus. In which case, normalization of economic activity backed up by political support could result in 5.8% growth. However, it would be irrational at this point just to assess the short-term economic impact of COVID-19. We should recognize the need to run our business with a high degree of uncertainty in the medium term, at least for the next 3 years. Such is the current situation and medium-term outlook for our consulting engineering industry. And next, I'd like to outline proposals for 3 prescriptions for the sustainable development of consulting engineering companies. These are financial stability, preservation of technical capability, and policy proposals for development cooperation. And number 1, financial stability should be preserved even in normal times. But for the coming 3 years, it should be more meticulously addressed. I believe that this crisis cannot be overcome by American-style shareholders-first management. A company which use return on equity as a management index and leverage up operation at times of how interest rates, low interest rates will have low liquidity at their disposal, may be prone to find that their strength diminishes when revenue drops, and when the crisis comes, there will be need to cut fixed costs rapidly. In consultancy industry, and this means reducing headcount as a means for survival. On the other hand, if retained earnings are prioritized during normal times, and shareholders' equity ratio is maintained at 50%, while maximizing long-term and short-term borrowing capacity to increase disposable liquidity. Many more options available for crisis management. Number two, financial stability contributes to the preservation of technical capabilities, which form the core competence of consulting engineering companies. Technical capability could be secured firstly through steady technological development, and secondly by human resources development. A characteristic of the current crisis is a stimulus to promote reforms to work style, working at home, remote project management, utilization of satellite, and communication data analysis for infrastructure development, along with other data technologies such as big data analysis and AI, enable the consulting engineering business to be resilient and sustainable. All of this is important not just for formulation of new projects dealing with prevention of COVID-19. It's also strategically important to use this period of business stagnation to develop new capability for areas such as project management of high-risk sites and application of new technologies in the coming post-coronavirus era.
Okay.
Number three, it's regrettable that each country in the world tends to advocate prioritizing its own welfare. I'm convinced it would be best for us all to fight this invisible virus enemy together with a shared objective of creating a safe and secure society in which we can all live together. Consulting engineers have an important role and responsibility to lead international cooperation through technology and engineering.
Thank you very much.
International development assistance organizations such as the World Bank, Asian Development Bank, and
Mr.
government
Alonso,
authorities.
please to finish here. Please.
Time up? Yeah? Okay.
Yeah.
Thank you for your kind attention.
Okay, thank you very much for that insightful way of looking at it from the Japan way. I get the impression that the emphasis is about risk management, is about focusing on domestic and less on more risky overseas projects because of the challenge of having to repatriate people back in. I understand the issue of a high degree of uncertainty over the next 3 years and prediction of low return and the need to reduce headcount if required, but also you summarize that technology capability and the opportunity to invest on technical capability and HR is critical. But you also finish up with a summary of, yes, more working from home. Yes, we need to look at AI technology, and also we need to look at how best to fulfill the delivery of service to our members. So thank you very much on that. I'm going to invite Engineer Bayo Adeola now, Chairman of Comprehensive Project Management Services from Nigeria, to share his own thoughts on the subject. Engineer Bayo, the floor is yours. Thank you.
Thank you, Nelson. Like you said in your opening remarks, I'm going to address this as a business sustainability issue. And I'm going to look at it primarily from the point of view of the firm, the firm, right? I think the two earlier speakers have looked at it globally and trends and have dimensioned the problem. For me, it is the member firms of the Association of Consulting Engineers, members of FIDIC, particularly from the African region. That's where I'm going to look at it from. And I'm going to address it in terms of timeline. What are the immediate issues? What are the urgent issues? that we face, and that we confront them. Then we look at the short term, then we look at the medium term, and hopefully we look at it in the longer term frame. In the immediate, the first thing that hits you is your cash flow. How much money do you have in reserve? And the most urgent cash demand is staff salary, consumables. You can spread out rents, you can spread out other overheads, but your staff have to take care of their family, and you rely on the salary to take care of family. And for small firms who don't have more than, who probably want from month to month, in other words, they just make enough money in the month to pay their salaries, maybe the maximum they have is a 2 months reserve. What happens to them? Maybe 3 months. And immediately we have to begin to say, do we spread our cash reserve over a longer period by reducing salaries immediately? Or do we retire staff and pay only a few people? Because those are the real issues that confront us. And so cash flow is key. How much money do you have? Some would already have collapsed by now because they don't even have any money at all. Which money will come in the short run? In other words, who are your clients? How much has the COVID impacted them and has impacted their cash flow? If the COVID has impacted their cash flow, they will in fact not be in a position to pay you. So your inflow stream will be severely hampered and you might be already in a crisis. But if you're fortunate to have clients that have stronger cash flow, if they are not operating, how do they even process the payment to get the money to you? If everybody is on downtime, if everybody is on lockdown, what happens to you? Even if you want to borrow money from the bank, the whole atmosphere of negotiating bank facilities takes some time, and the climate is not just right for it. So that's the first thing that confronts small firms. The next thing that confronts us, therefore, is what do we do with our staff? Now, if we cannot pay them, what do we do with them? Option one, tell them to go. But these are skilled staff. You can't just tell them to go because you will not be able to replace them when you need them. So you have to negotiate with them. Reduction in salary. Is it a temporary reduction in salary? Is it a permanent reduction in salary? We don't know how long this will last. So we confront them with how to manage our overhead vis-a-vis our staff. The third issue that will confront us is our workload. Now, you have a certain number of projects in your portfolio. How many of them will sustain post-COVID? How many of your clients will still be in a position to want to continue with those projects? Either because they can't afford to, or because maybe they don't need them again, because there's some realities have emerged and they are reassessing the whole issue. And even if they are going to take the decisions, it will take them a couple of months, maybe several months, to come to the decision whether your project is going on or not. So we have the dimension of cash flow, we have the dimension of managing our human resources, and we have the dimension of managing our projects. And all those ones are fashioning on us simultaneously, and we need to resolve them. Then in the short to medium term, we then say, what is the new normal? What will happen to the consulting industry? Which projects will be on? In a country like Nigeria that is heavily dependent on the price of oil, the price of oil has crashed. The budget of the federal government has been reduced severely because the revenue has reduced severely. So what's going to happen? How many of those federal government projects will be able to go on? And therefore, your source of projects to survive, what is going to happen to them? And if you're dependent on the private sector, each sector is impacted upon to a different extent. In the Nigerian environment, again, the oil and gas is a huge part of the economy. The oil and gas itself, without COVID, is suffering its own pressure. And therefore, how many of the oil and gas projects will go on? How many of the infrastructure projects will go on? How many of the private sector projects will go on? So we are challenged by these issues of the uncertainty of the short and medium-term future of the consulting business in Nigeria and sub-Saharan Africa as we know it. We then look at the medium term and I said, okay, with all that has happened, with all the trauma and the therapy that the COVID experience has given us, working from home, not needing some assets as much as you needed them, not needing some production activities as the way you thought you need them, there will be a new normal, which is just emerging, which we just don't understand, which we need to dimension so that the consulting engineer is beginning to think as to what other new types of projects might we be involved with. For instance, what happens to a train station or a bus station if we're going to have to maintain physical distancing for the next 3-4 months? We have to make the infrastructure responsive to the behavior that we want to encourage. And therefore, there might be new opportunities in that type of space to modify, to remodel, to rethink, to reconstruct a few of the existing infrastructures that we have. We need to become more creative, we need to become more imaginative, and try and see where the new business opportunities are and begin to invest in them. It will take time, it will take energy, but what I see really is a significantly challenged cash flow, it's a significantly challenged balance sheet, it's a significantly challenged sustainability issue for our consulting firms. The solution is addressing it like Kipling is doing, bringing the issues to the front burner, and in a creative way, trying to imagine the future and trying to design our responses to them as businesses. That would be my summary of the issues. Thank you.
Engineer Bayo, that's a very, very good way of looking at it. I like the immediate impact, the short to medium term, and the medium to long term. I think the key message that you actually said was individual country have their own dimension. In the case of Sub-Saharan Africa, it's not just about COVID. You also have the issue to do with the oil price, which dictates, how much investment is coming through. But you concluded what said, the impact is going to be significant on cash flow, balance sheet, sustainability of the sector, including the industry as well. But more important, that you're saying, let's be imaginative and see what else can come out of the opportunity, that is actually on there. And you touch on the issue about the new norm. It's not designed what we used to design. The requirement will change, and we have to be more creative in the way we go forward. Thank you very much for that. I'm going to invite Chris Lewis, who's a partner at EY in London, to help us to sort of give us an helicopter view of how the industry is perceived from the financial part of it, and also, challenge us on where you're coming from. Chris, the floor is yours. Thank you.
Thank you, Nelson, and thank you to the FIDIC team for inviting me along. So I guess I'm a bit different in that I'm an advisor to the sector. So yeah, I'll bring a different perspective, but I think there'll be many consistent themes. The first, I'm going to go through three messages. The first one is about the economic context and how you need to prepare for different scenarios as we come out of this crisis. The second, I'm going to go through the framework that companies are adapting and how they're managing their liquidity and how they're focusing on the cash flow. And the third section, I'm going to go through about, well, what's coming next and what does recovery and resurgence look like for the infrastructure market? So on the first one, the economic context. Clearly, we have had a sharp decline in the level of economic activity. And what we're seeing now is correspondents talking about 4 scenarios that might come out. The first scenario is a V shape. We have a sharp decline and we return sharply. I think most of the economic predictions actually now think this is unlikely. And we're seeing that coming out of lockdowns is actually harder than going into lockdowns, and the rules are more complex. And we've certainly seen that in the UK over the past few days. The second economic scenario is what we call a tick. So sharp decline and then a gradual increase in activity. And the third scenario is a W, so a second double impact as we potentially have resurgence and re-lockdowns and extra tight. And then the final scenario is a trough, so a longer and deeper recession. So when you look at the economics, and those, I think, gives you 3 scenarios that you need to prepare for. Because as we've heard from others, it's unknown exactly what it's going to look like in the recovery phase. 3 scenarios. So when you go through and you think about, right, how do I prepare my firm to deal with what's coming next? You need to think about what will happen in the tick scenario, in the return gradual increase, what will happen in the double impact, the W scenario, and what will a trough look like for the company, and how can I make sure we're prepared for all of those? So that's the first, the economic context. The second one is the framework, and what are companies doing to respond? Well, here we break it down into now, next, and beyond. And what I'll touch on first is the now, the resilience phase that companies are in at the moment, and really focusing on the short-term needs of people and society, of business continuity, of financial viability, and then managing the situation. And I'll particularly pick up then on the financial viability, which I think is the relevant bit to this topic. So companies are focusing on liquidity, getting hold of whatever liquidity they can. So how can you draw down on bank facilities? And we've seen some really huge drawdowns. InBev on a 9 billion drawdown on their on a working capital facility. We've seen people managing cash flow, and managing cash flow doesn't, for some that means slowing down payments. For others, it can mean actually accelerating payments to those that are more challenged in the supply chain. So releasing cash to some of the smaller suppliers in the group. And for many, it means government support. Looking at the support arrangements in place, be that furloughing of staff, be that loans available from government, or other packages that are intended to improve the financial viability and resilience of the company. I think what you need to do as a company is you need to prepare that. You need to manage your cash flow, and a lot of companies are looking at, therefore, a 13-week cash flow forecast where you work through the 3 likely scenarios of what might happen in the near term, and you make sure that you've got the liquidity and to be able to survive, and you focus on that cash flow on a daily basis. So that's what a lot of companies are doing now. I think the third section is, well, what's coming next? And here we look at, this is the recovery and resurgence phase. I think for the recovery and resurgence, what you're seeing is there will be a restart to sites and projects that paused. There will be continuing focus on liquidity, and as you go and look to restart projects, how do you make sure that they are generating cash flow and not consuming cash flow? And there also needs to be a focus on collaboration and understanding. I think what you've seen is many companies have looked at the different responses of their customer bases. So government customers, people with a high proportion of that, have been able to get more cash flow than those who've been into more affected sectors. So that's the restart process. And I think when you look to the resurgence, what you're going to see is actually we're going to come out of this with a different need for infrastructure projects. So your clients out there will have changed requirements. Projects, traditionally, we've been building projects a lot, especially in the UK and other, for peak demand. You know, we've been building for peak energy demand, peak transport demand. Actually, what we've seen is a really significant behavioral shift. And that behavioral shift means people will not go back to working in offices in the way that they used to, which means that we won't actually be building for peak demand. We'll be building for sustainable projects which have different needs. The second one is we're going to have different ways to deliver projects. We've seen, I know in the UK, where we've been developing sort of stand-up hospitals in 7 days, not 7 years. And actually what you see is coming into the crisis, we've had a lot of long development cycle projects. I think coming out of it, we're going to be into much shorter development cycles. So what can you do quickly? And that means you need a different client relationship. your client relationship, as we said, it needs to be very attuned to what are the needs, what are the changing patterns, and very attuned to how can we deliver things differently? How can we adopt technology? How can we find ways to deliver quicker? So those are the three key areas then. So the first, just to recap, the economic situation is uncertain. There are probably three likely scenarios of what's going to happen: the tick, the W, and the trough. Make sure you're prepared for all of them. The second is your companies should be managing liquidity and managing cash flow on a rolling basis, and building resilience in order to look after your people and provide opportunities for them. And the third is, as you look to a recovery and resurgence phase, think about the different need for projects, think about the different ways to deliver, and focus on those client relationships and what's happening. Nelson, thank you.
Chris, thank you very much on that. I don't need to summarize it. I think you summarized it very eloquently. So I'm going to move on swiftly, and I use the word swiftly, to James, because I think your summary of what you've just spoken about, Chris, is actually very punchy, and I'd like to come back to that later on. I'm going to invite James from States to give us his own perspective. A reasonable size consulting firm with footprint in North America, and actually covering the whole diversification of consulting services. So James, the floor is yours. Thank you.
Thank you, Nelson, and good morning, everybody, or good afternoon, depending on where you're at. Appreciate the opportunity to be with you all, and appreciate the comments from my colleagues on the panel. Yeah, maybe a little perspective here from the States. Again, I'm with the CHA. We're about a 1,300 person diversified engineering, consulting, construction management firm. So we're touching a lot of the industry and seeing it from many different angles in terms of this crisis that's affecting all of us. From a high level, what's really happened here in the States as a result of the COVID crisis is nearly 15% unemployment in the country, which we know maybe we're not feeling the impacts of that, at least from an engineering perspective today, but we know that has ramifications for our industry typically down the line, 6 to 12 months. We're a typical lag. But more specifically within the construction space, I think we're just under 1 million in terms of unemployment there. And if you boil it down into the A&E space, I think there's just under 100,000 that so far have been impacted, which is not significant in the grand scheme of things. So really the takeaway for us here in the States has been that, depending on what sector or end market you're working in, it's been pretty much business as usual, provided you've been able to transition your employees from working in an office to a remote. And if you've invested in the technology to do that, we've seen that utilization, at least in our business, and many of my peers are seeing that we really haven't missed a beat. We've been able to continue to work, collaborate, and service our clients. And again, really dependent on what sector you're working in. So, at least from a high perspective, right now, as we sit today, it's kind of the story of the haves and the have-nots. That for a bigger company like ours, we were not able to really tap into some of the federal stimulus or care package that's been put together by the government. But those with 500 or less employees certainly had an opportunity to get an application to get loan assistance with for payroll protection and other means. But we unfortunately were of a size that we didn't really qualify. In our space, where we're seeing the biggest impacts, if I boil it down, if you're sort of playing in the federal space right now, you're probably pretty happy. If your business and some of our business is actually tied into commercial development on the private side, if you're into sort of higher education, if you're into retail, oil and gas, I mean, those are the areas that we are seeing the biggest impact in our space. Or internationally, as some of my colleagues have said, we do some international work, and as a result of restrictions on travel and other restrictions, we're unable to sort of get back to our clients. So we're feeling it on that front. So but overall on a high level, we're faring pretty well. But as Chris mentioned, really we sort of look at it in kind of three lenses. One is cash management and liquidity. Cash is king during these during times of uncertainty, and we actually have taken many of the measures that Chris outlined. We quickly drew down our line of credit. Felt like we'd rather have cash on hand, and had the capacity to do that, knowing that we could pay that back when we get through the crisis. Cash was really the important part of our initial response. And then we went into very aggressive liquidity management, and utilizing similar tools as Chris outlined. We're doing a weekly 13-week cash flow, looking at what are the cash needs for the business, and what are some overhead or expenses that we can manage more tightly in order to ensure the long-term longevity in the core of the business. And some of those actions ranged from reductions of executive salary in some cases, to deferral of bonus payments, to reduction of a very surgical, I guess I would say, approach to some reductions in staff. Very small. We were very fortunate, but areas of the business we felt like were very challenged and may not have come back as quickly as we thought. We'd have to take some action there. We were looking at all aspects of non-discretionary spending, areas that are not essential. So we really, took an aggressive approach in order to maintain the core and the liquidity of the business. And importantly, we also looked, at the health and safety of our employees. That was paramount, making sure that they could be productive from home, and we were following all the requisite guidelines of, U.S. CDC and et cetera. So that was another critical aspect to ensuring the business continuity was being maintained. And then thirdly, client outreach was a key strategy for our business to ensure, again, we get through this in the most efficient manner. Building backlog where we can, understanding what our clients' needs are, staying close to them, being responsive, and so they felt like we were standing by them during these very challenging times, and being in position to be a strong supplier on the other side. So this is, we as a company, we have weekly meetings regarding our liquidity and business planning with our board. It's just we feel like that's good governance and staying close and getting a lot of input. We maintain sort of weekly cadence with our employees in terms of communications, what's going on, and we found that has really provided a lot of comfort in these times of uncertainty. So we're trying to build as much flexibility and, again, preserving the balance sheet as strongly as we can during during these times of uncertainty. And look, we have the opportunity to roll some of these actions back when we feel like we have better visibility into what the year may look like. We've been fortunate, and I think we look at our plan for the year right now as we stand, probably 5%, less than 5% of our revenue we feel like has been pushed out of calendar 2020 into 2021, and we know that could continue. Our peers in a range, or looking at anywhere from 5% to 20% decline in revenue. That gets probably pushed out depending on, again, what kind of work you're doing. So I think all things considered, not a bad place to be. I would anticipate that going into 2021, maybe a little bit of different story, as again, we sort of feel the lag, and whether the federal government here in the US steps up with a stimulus package that'll help fortify state and local municipal budgets, that will certainly be impacted by reductions in tax revenue, which support a lot of our infrastructure projects. So we absolutely believe that's going to be a need. Otherwise, it could be a longer impact or more dramatic impact to our collective business. So with that, Nelson, I'll hopefully give you some time back.
Thank you very much, James, for rescuing me time-wise. I think we managed to get back on time, and that give us sufficient time for good Q&A. Now, first of all, let me just thank all of you, including Mr. Arimoto, because what you said, you've right-sized your business. You look at the cash liquidity, and we look at also, how do you manage the balance sheet, but more important, getting close to the client. I think the word that I hear again and again is, yes, deal with now, but also think about the medium term to long term. Chris, in your, 4 scenario that you talked about, can I just come back to you and punch you in the face by saying, truly, it's definitely not a V, and we know for sure that, it may be a W. In your, helicopter view, and looking back in, even though you cited the idea of building a hospital in 7 days, okay, the Chinese built, the hospital in 10 days, so the English are doing 7 days. Do you think, seriously, do you think if we end up with a W shape, which is there may be another, snack somehow down the line, that we can truly actually say we are ready for the new world that is coming ahead of us? How ready are we in the way the dynamics of the market is going to change? Are we truly ready for that change, Chris?
I don't think we're ready, but I think we've got time to get ready. So in terms of the economic context is uncertain, but we know that whatever we return to will be a different infrastructure environment. So I think the needs of how you deliver infrastructure and what are the requirements, as I said, that they definitely will have changed. I think we've seen the demand for public transport. Clearly, it's dropped well away, and it's not going to increase to the levels that it was at before. But there will be a demand for more on the private transfer. So that there will be continuing demand on roads, and we've seen things like the adoption of technologies to try to manage traffic flows, which can have more immediate impacts than building new. And I think it's those kind of things. It's what is it that will be the re-emergence demand patterns, and what are the types of things that we can do that can make an impact on the infrastructure we have, which will, I think, move away from these very large, few big iconic projects, probably to smaller projects, network improvements, adoptions of sustainability. So how can you do more to put in place, as you mentioned, broadband connectivity? How can you do more about home connectivity and home charging for electric vehicle usage? I think those are going to be the patterns of things, and governments will want infrastructure to support the growth and develop of the economies as they come back. So what they won't want is to go through long development cycles. They'll want this to be quick. So that's what I'd encourage people to think about. What can you quickly do to deliver and meet the infrastructure needs that people will have?
Thanks very much for that. My next question is to Louis and to Engineer Bayo. The question that I hear again and again, and the words that keep coming to mind is reserve. Reserve, tapping into your reserve, making use of your reserve. And somebody, I'm not quite sure, I think it was Engineer Bayo who said reserve of working capital. Louis, if I start with you, how much at this difficult time should a company in our sector consider dipping into their reserve? Because I hear the word that is managing cash liquidity. Is it a case that you need to balance what you are paying out to your staff, reduce the salary, take away the bonus or delay the bonus, or do you actually balance that by using the reserve? How much do you recommend these days, depending on size, that one should dip in, on the assumption that you do have a reserve? So the question to you and to Engineer Bayo is, how much of that balance? It must be very difficult for you to make that balance. How do you come to right balance? Louis?
Well, I think this question depends on the company. Obviously, depends the level of reserves that you have. In our companies, in the medium and small companies, usually the reserves are very small because, don't be wrong, this is an industry that the percentage of profit is very small. And the possibilities of getting losses some year is important. That means that usually the reserves are very small. It's different in the big companies and in other countries. But in Spain and Latin America, the level of reserves are very, very small. That means that the possibility to dedicate reserves today to survive is reduced. In my opinion, most of the owners and managers of the company, they are ready to make a big effort reducing reserves to keep personnel, but until some level, because finally, credit will be necessary nowadays. And in order to get credit, you have to fulfill some covenants, and the level of reserves will be fundamental in getting credit. So it's very difficult. It's very difficult to find only one answer about this question.
Okay, thank you very much, Louis. I'm going to ask Engineer Bayo exactly the same question, because I think you cited the idea of 2 to 3 month maximum. I just wonder, how much of that reserve do you dip into that, and where do you make the decision, considering that you said people are the real asset of the company? You cannot let them go too quickly, otherwise you find it difficult to recruit. Where do you draw the line, Engineer Bayo?
Thank you, Nelson. The issue is that at our own end of the woods, the reserve is usually very low. We survive as a going concern, and most firms run after clients for fees to be able to pay salaries at the end of the month, even at normal times. So they're probably starting in a panic mode. In other words, there's usually little or no reserves. Maybe the stronger ones will have 2 or 3 months reserve. So it's not a question of whether you choose to dip into it. No, it's beyond you. It's that you don't even have the money. So you are not making a choice. You're facing a crisis. So you say, where else can money come from if there's no reserve? The options are clear. You let the people go, or you go back to equity. In other words, these are privately owned companies. These are firms that are owned by 2 or 3 individuals. They might have to dip into the pockets of the owners if they have that level of liquidity. They might borrow from their staff by owing the staff their salaries. In other words, it's not a cut in salaries, it's a subsidy to the company during this transition period, and hopefully we will get over it. But it is not a decision of how far do you go. No, you don't actually have the reserve, and therefore there's not discretional decision of using it or choosing not to use it. Nelson.
Okay, thank you very much. I'm going to go to Mr. Arimoto now. The question to you, I think what I sense in your question, your presentation was that you retracted from private sector and focusing on government sector. And you've retracted a lot from the overseas where there's risk, even though most of them are ODA or JICA fund, and back into domestic. So the question for you, how reliable can one place the business on government investment on infrastructure as a means to come out of this challenge? Question to you.
はい。JICA とか JICA の ODA ローンとかというふうに言ってるけれども、どういうプロジェクトでもって、何ですか、
JICA の今の仕事は、伝統的分野の仕事が多いので、これからは新しい技術を使ったもの、それから、特に今回勉強したことは、ハイリスクの地域において、プロジェクトをリモートでマネジメントする、そういった技術が必要だということ、そういったことをですね、JICA に対して技術提案をして、プロジェクトを形成していく、そういうことを考えています。
And we made a policy recommendations to Japan's JICA, Japan International Cooperation Agency. And as a result of our policy recommendation, JICA has recommended that overseas assignments can be transferred to domestic ones. Then we can also propose demonstration project with a view to a post-COVID-19 environment, such as remote project management in the high-risk region, using, for example, digital technology. Yeah, thank you.
Thank you very much. I'm going to go back into James. James, you talk about your three lenses. I'm now playing the word back at you. You talk about your three lenses, which perhaps is not actually different from what Chris talked about, but you talk about cash management, liquidity, and then the client focus. Let me come back to the client focus, because this message was echoed by Engineer Bayo and Chris and all of that, which is getting close to the client and being seen as a collaborator to the client. Because in Engineer Bayo's comment, he said, well, you need to understand, because some client may be able to respond with business as usual immediately after it. Some may change their issue. I just wonder, in your client outreach program that you talked about, how do you manage to keep that going with the lockdown and yet getting close to the client to understand which direction they want to go after the lockdown?
Yeah, certainly different world now, trying to maintain client relationships. We're used to having meetings, coming face to face, and sort of working through potential projects or responding. But using technology like we're using here, is a lot of reliance on outreach and setting up virtual meetings. We're actually able to put together requests for proposals using Zoom type technology, but it's something that we felt on a weekly basis, just continuing to maintain, to let our clients know that we're here. How if they're unable to respond in certain circumstances, if they don't have the resources, can they rely on us to provide those resources? But just being flexible, because not all clients have the same level of resources or capability that we may have, but we understand that if we're here for them in their time of need, that hopefully when the dust settles, that we'll be continue to be considered a key supplier for them going forward. And as we start to emerge from this, and some states are ahead of other states in terms of being able to open up businesses, we're looking at creative ways of having meetings with following the guidelines of physical distancing, et cetera. So it's really dependent where we are with our clients, but I think at the end of the day, for all of us, staying close to our clients during a crisis and knowing that we're here for them, for the long term is really critical. And that we're employing all the the technology that we have available us in order to continue to maintain those relationships.
Okay, thanks very much. I see a lot of questions are coming from the floor. My job now for the next 10 minutes to try and channel each question across to individual. There are a number of questions. Can I put an apology? I would not be able to cover all the questions, but one of the questions that comes through, if I can read it quite clearly, it says, what happened if you haven't got any reserve? How do you deal with that? And you have some liability prior to COVID coming through. What do you do? I mean, this is a question to the panelists, if you haven't got reserve and you have issue, you are living by the mouth, and suddenly you have this COVID-19, what do you do? What would you advise? Who wants to go? James or, Louis? Can you unmute, please? Can you unmute?
Sorry.
Yeah, you're not unmute. Yeah, that's fine. Yep.
Good. Yeah, if you don't have a reserve, and I'm assuming you have, meaning you don't have, a line of credit or able to tap your bank, debt, funds of any sort. Really you have to identify what's core to your business and what's not, and start to make some very hard decisions on cost-cutting measures. Anything that is non-essential, really you need to tighten your belt and address in order to generate that liquidity, so you're at least able to maintain the key, your key employees and to service your key clients. Everything else really has to be, has to really looked at with or gone through with a fine-tooth comb. Otherwise, you really don't have, a lot of flexibility. So you really got to boil it down to, what do I need to pay in order to keep my clients and keep the key employees in place, and then you sort of build back from there.
Right. Thank you very much. I mean, Louis, do you have a very quick comment on that before I go to the next question?
Yes. First of all, I would like to say that for all the attendants to this webinar, that the main objective, as I know, of all the board of directors of our companies and managers is to keep as much the healthy of our employees, economical healthy, and to keep as much as possible the position of the employees. And if this represents to make a big effort and sacrifice, we do it. What happens? That sometimes, for example, in the company, listed companies, finally the reserves belong to the shareholders, a big group of shareholders, and you have the obligation to take care of these reserves. So it's not easy to find a proper balance. But believe me, the board of directors in all the companies I know, and I know many companies, all of them, they try to defend the interests of the employees.
Okay, thank you very much. I've got a question for Engineer Bayo. This is from a gentleman called Festus. He said, my name is Festus. It's from magazine in Nigeria. He said, my question goes to Engineer Bayo. Some consulting firm in Nigeria having invested much in training some of their staff. Will it be wise now to lay them off now that there's no cash in due courses? What's your advice?
Okay, I will answer that, but I'll make a comment on the first one first.
Thank you.
The source of cash is either reserve, loan from the bank, or equity. And therefore, in small firms where the partners are relatively comfortable, they can actually inject equity. They can also reach out to the senior members of the company to inject equity or a soft loan rather than a bank loan. So that's the one sector that we can look at in small companies. I know that that would not work for big companies because the dimensions are different. But in small companies, I think that only equity and borrowings from senior members of the firm can cushion and buy you a couple of months in the interim. Now, in looking at the future of the workload, you have to really be critical. If those staff are as critical as you say they are, then you need to keep them. What options do they have? They stay with you and weather the storm with you, or they leave you and do what? Now, if you have a good relationship with them, then they probably should want to believe that investing with you is a preferred option. But if over the years you haven't treated them decently, they probably will see this, that this is the time to get out of this way. So you will be reaping the result of your human resources behavior over time at this time. The answer really is for you to keep your core staff and make it worth their while to make the temporary sacrifice. If they can see the light out of the tunnel, that by sacrificing with you, they will benefit in the long run. And it's their better option than just leaving the ship now and starting from somewhere else. Okay,
thank you very much. There's a question coming to the panelists, and I think it's from Ini of Sorrento from Moderator in Indonesia. The question, this is to the panelists: how long should the company could survive, for the COVID-19 situation due to delay in infrastructure project? To keep cash flow, what should you do? To maintain staff, salary reduction or redundancy, and then do recruitment again? Is that what you do? If the work is not coming through, do you keep the staff, or maintain, the staff, or you let them go and you recruit them? What is the advice? Who wants to take that? James?
Sure, I'll take that. Yeah, I mean, we faced a little bit of that. We've got projects related to private construction here in the States, and to the extent that we see it coming back, it's just being delayed. We're actually furloughing people, so we are letting them go, paying their benefits, but not paying their salary. If we, in circumstances where we feel like the impact is going to be beyond several months or a year or more, then we are actually, probably taking action that will be more permanent and reducing staff. So I really think you have to look at the type of work and projects that that are being impacted and make a decision on that basis. Because as we all know, key resources, employees are hard to come by, and letting key folks go is will be difficult when things turn around. So we want to look at it through the prism of which what are the projects and what specific end markets do we feel like have better longevity or in the short term are being more impacted.
Okay, thanks very much. There's a question from Jay Wolverton. I think I know who this is. I think I
The
do.
setup.
It's a setup, and it's not a question for you, James. I think to the rest of the panelists. Is that are the government in all of the countries represented on the webinar today seeing infrastructure spending as a good way to stimulate their country's economy? I suspect the answer is yes. But is there a country within the panelists who says investment in infrastructure is not the way to go? Chris, what's your take? I know you talk about maybe different type of infrastructure and maybe short-termism, but you do see infrastructure as a way to go.
I think infrastructure is a good way to invest. I think the challenge governments have got is that they've put their own balance sheets under a huge amount of stress in this crisis. Yeah. Right? They're paying, they're providing loan support. They're providing support to furloughed employees. They're providing more support, and so actually their own positions are under stress. So their ability to finance these projects themselves is also constrained. So I think, yes, infrastructure as a route through to economic success, but also looking at models whereby you can get international finance in to support the development of that infrastructure, because one thing that will certainly be true is governments will come out with less liquidity themselves than they had coming in.
Yes, Engineer Bayo, earlier on you talked about, you know, the sub-Saharan African country that depends on oil have seen a huge reduction in the oil price and therefore hamper the ability of the government to invest in infrastructure. And the private sector is equally difficult. I mean, is there a fundamental belief, though, notwithstanding that investment in an infrastructure is an engine for growth?
Well, the sub-Saharan African countries have actually not used infrastructure to develop their economy pre-COVID. Maybe COVID is giving us a fresh assessment of the issue, and maybe post-COVID, this question of recalibrating might in fact help us what we didn't do pre-COVID, because a lot of the infrastructure were either foreign financed or foreign executed, and therefore the amount of the indigenous involvement, even in the consolidated industry, was not big enough pre-COVID. Are we going to be able to persuade them to inject some money into infrastructure and make sure that it is now directed at developing the local engineering capacity so that it is used internally and not used externally, and then it goes to paying foreign debt? You get the road, but all the money goes to China and also some other places rather than to the people who are here. So maybe we will use COVID as an opportunity to recalibrate.
But Louis, I know that you when we spoke last week at the panel session there was a big drive from you that we must advocate now across the world that investment in infrastructure is a means to get out of this. Is that the view in Spain and Latin America at the moment, or are they in a sort of not knowing?
There is no doubt nowadays in Spain and Latin America that construction is going to be the best tool to boost economy. The discussion nowadays is which percentage of this investment is going to be developed by authorities and which percentage is going to be developed on PPP basis. So which is going to be the participation of the private initiative. But no doubt that construction, once again, will be the locomotive of the economy in Spain and Latin America countries.
Okay, I'm going to go to Mr. Arimoto. Do you share the view that Japanese government need to invest in infrastructure, or the Olympic 2020 that is no longer on? Is it over?
来年のオリンピック等々にらんで、日本政府はインフラ投資をどういうふうにしていくのか。
基本的に日本は災害の多い国なので、法律として国土強靭化を進めるということが約束されています。で、2020年度まで3年間で7兆円の投資がかかっています。で、今後もその安全と安心のためにインフラストラクチャー、社会基盤を整備していくという方針は法の下で進められると思っているので、そこは他の皆さんの国に比べると恵まれているというふうに考えています。
Yes, As you may know, Japanese government has a policy to make an investment to infrastructure sector in the coming 3 years. In total, 7 trillion Japanese yen. And basing on this strong intention, the infrastructure investment level in Japan will be maintained. I'm rather optimistic in this area. Thank you.
James, I know that in our opening conversation before we went live, we were talking about America and our president. I just wonder whether truly you do believe that, President Trump believed genuinely that pump priming the infrastructure market is the way to go. Do you share that view?
I do. In the long term, I think everybody understands that probably the quickest way to get the most people back to work is through a federal stimulus related to infrastructure. And I know, being in this industry for now, going nearly 15 years for myself, there's always been a lot of talk of transportation bills and infrastructure bills. And, we had the shovel ready back in 2008, and that really didn't sort of, pan out as we had probably had hoped. But I do believe that there is, some real, impetus to get something done. I think we understand that there are absolutely going to be state and municipal tax shortages in our coffers that are going to need to be supplemented, and really the best way to touch a lot of the economy is through federal stimulus related to infrastructure. So we're hopeful, knock on wood, and I think I think there's enough support hopefully on the Hill to get that done.
Okay, thank you very much. I've got one more question from the floor, but I think I've got the answer to this. The question is from Asha Kumar, who said, will COVID-19 be force majeure for Indian contract site where pandemic word is not mentioned in the force majeure clause? The answer is go and read the FIDIC guidance that we put together on force majeure. The answer will be there. So go on our website. I think we have an answer to that. But I just want to close out now by putting a question to all the panelists. FIDIC has been looking to how do we get closer to our members around the world. And it's extremely important that we try and find out what are the issues that we can deal with on behalf of the industry to help us move from where we are in a very structured and manageable way to the next phase. I hear 3 phases being talked about, and we've had different conversations. So I'm going to ask the question, starting off from, Louis, what do you think FIDIC should be doing going forward? 1 sentence, quick one.
Listen our member associates. This is a board member what I think we have to do.
Okay. Chris, what should we be dealing with or addressing going forward in the future?
I think, how can you get projects going without creating cash negative situations? So how can you work in cash neutral?
Okay, thank you. Engineer Bayo, your advice to the industry?
What I think is that FIDIC webinar might be more regionally focused. In other words, if you spend 1 hour looking at Sub-Saharan Africa, you will get more mileage for that subset. Then you can look at Asia, then you can look at North America. Trying to get all of us into 1 hour means that we just get bits and pieces without each one getting a big enough pie. Maybe you will look at segmenting the webinar.
Thank you very much. I take that point as a takeaway from us. Perhaps when we speak to our regional grouping, the danger is always be careful to make sure you don't overlap what the regional group will do as much as what you can do from central end. So James, your comment, your advice to the industry, I'm sure you'll be talking to ACEC. What's your advice?
Yeah, I think if I look at our business and what has really helped us through this is being a diverse company in terms of the clients that we serve. So my recommendation is, as companies look to bolster themselves against a future crisis or recessions, the more diverse type of work and clients you have, the stronger you're able to sort of withstand some of these economic pressures.
Okay, Mr. Arimato, quick word, your advice.
Oh yeah, a keyword is the shift of trend. I'm so sorry. The keyword in Japan, especially in Japan, is shifting from the shift of the trend from so-called hard to soft.
Okay.
Because the numbers of engineers itself have been decreasing. Therefore, we have to much more focusing on the high technology, including digital transformation.
Thank you very much for that. On that note, we've spent 1 hour, 30 minutes, spot on, coming up. And I just want to take this opportunity to thank all my participants, those who've actually been on. We have people, close to 400 people online today, which is really very good. A lot of questions coming through. I want to thank, the individual panelists, Chris, James, Louis, Mr. Arimato, and Mr. Engineer Bayo. Thank you very much for your contribution. A massive thank you to our president who continues to support us on what we do. I just want to wrap up by saying, yes, it's good to know where we are in the issue of COVID-19. Yes, it's good to know the statistics of the fatality of people passed away and how many people being infectious. Yes, we need to know that we are in a state of shock and we are in a period of uncertainty going forward. But we do have a business which is about building resilience and building society. The key message for us is that the balance sheet needs to be defended. One needs to manage its liquidity. We need to look at what reserve you have. And I hear the comment from Engineer Bayo as to it's not just the reserve cash you have, but actually equity from members and owners of the company to pump prime. But over and above this, I see this as continuity of business, about relationship with your employee, relationship with your client, and getting to the new norm. What we used to do will change, and we have to be ready for that. So on that note, I want to thank everybody who's been participating in this webinar. Thank you for your support. The next session is going to be on Thursday, Developing Crisis Response Plan, an industry perspective. We have interesting speakers coming along. On that note, I say thank you very much to our president who is supporting us once again, Bill. Thank you for James, and thank you for Chris, Lou, and Mr. Arimoto, and Engineer Bayo. Thank you very much. God bless you. Thank you.
Thank you, Nelson.
Thank you very much.
Thank you.
Thanks, Nelson.
Thank you very much.